Really great example today, the 14th of August, on just how our interest rate tracker and real time sort of component of that tracker can help you as confirmation in a trade. So, what happened? Well, we had the PPIs come out of the United States and we had the lightning bolt flash. And that means that this data was outside all the analysts' expectations, right? So, what you'd expect is you would expect some kind of move. The problem with this data is that it's not really tier one data, right? So it's not like you can see it's in yellow. It's inflation in a big inflation print. It's not NFP. It's not some of these real big market mover data points, right? So what do? You go to the chart. Here's the chart. Euro dollar falls, and it's fairly significant. It's from the 116.85 down to the 116.51. And the market starts to retrace. So at this point, if you're on the 1 minute chart, the question is, it's like, what do you do here? Right? Because the market's starting to retrace, it pulls back again, and you're like, well, maybe get after in 1 minute bar here. But you're like, it's not really a tier one event. So should I really chase it? Maybe I'll see what happens. Market moves against you, market moves against you, market moves against you. And here you're thinking up in here, like, well, there's some nice support resistance or, resistance band up here. Maybe I short here and there's some nice risk reward because I can short in here, stops above here, right? But it's like, maybe this just keeps breaking the highs, right? What do you do? So at this point, really having another professional tool gives you such an edge because you're able to look at another market, the stir market, interest rate traders, and you're saying, what do they see that I'm not seeing in the spot price? So if you go over here, click on our interest rate tracker indicator, and it loads up. And you can see in the near real time section here at what was happening. So we had 27 basis points of easing that was priced in at the start of the day. Not really moving anywhere, not really moving anywhere, right? And now look at the timing, right? It's like 8:47, this starts to move and it moves up. And what does up mean? Well, up means less easing is being priced in. Less easing, right? Now it's not a lot. It's like 27 basis points up to 23. So 4 or 5 points, right? And it doesn't mean that they won't cut in September, but on an intraday basis, what it means is that the interest rate markets are saying, okay, less easing, so the dollar is going to strengthen. And what you want to look for here is they started pricing in less easing, but then that didn't stop. That's the key, right? So it didn't stop. It just kind of continued throughout the rest of the entire session. And, that sort of thing when you're 15, 20 minutes after the trade, or you've got another pullback here and you're thinking about, shorting, or you got another pullback here and you're like, oh, I wonder, what should I do? You can use that as extra confirmation. It's not something to like you blindly look at, but it's definitely when you combine it with other factors, like, the fact that you missed in, you were outside all analyst expectations here. You combine it with your support resistance. It's just a great confirmation tool that can help you make that decision.